Welcome back. Was I wrong? Well, I may have been wrong about the extended cycle, saying that it was not actually happening. The other day, about 2 weeks ago, I posted this video called The Extended Cycle is Not Happening. I would definitely recommend going and watching that video. Just type in the Cryptoviser, The Extended Cycle is Not Happening. And it will come up right here. Don't fall for it. Sell here is the thumbnail. I would definitely recommend watching that video because I lay out and break down why I believe that we potentially are not going through an extended cycle, and the extended cycle is just BS to get you to hold your coins and not sell into the rip. Because remember, we want to lock in profits. We want to exit this bull run with profits and wealthier than we were before, right? That's the whole point of investing. And so let's break down in today's video. While this theory about extended cycle, I still do not think is going to occur the way that Raul is saying, let's kind of theorize how this could potentially happen. Because as you guys know, in my investment thesis and strategy, I want to know all sides. I want to know the good, the bad, all the different theses, and see how they could or could not play out. Because I may need to change my strategy through the market based on factors that we don't know, right? Maybe there's going to be more money printing. Maybe there's going to be another war with other countries, and this could all impact the financial markets. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. That way you never miss a new video. I upload almost every single day, bringing you the latest happening in the financial world. And a lot of what we do on this channel is talk about the markets and do deep dives to understand where the market is, where the market's going. And we're going to be starting right here with the extended cycle. And then I'm going to show you guys potential thesis and news and what other people are saying that could potentially agree with this extended cycle. Now, before we go there, I just want you guys to understand, like, there is a thesis and a potential that Bitcoin is going to become the only money worth having. Because remember, we are a debt-based society. We have $36 trillion and rising in debt, even with Doge going into different areas of the government to, cut waste, fraud, and abuse. It's not enough. And they realize, like the government and the Treasury and the Federal Reserve, they all realize they are going to have to print even more than they're printing right now. Let's listen to what they were talking about on Joe Rogan about Bitcoin potentially becoming the only money worth anything. Let's listen in.
Imagine if Bitcoin becomes the only money worth anything. And then everybody's like, but I don't have any of it. Well, your money's not worth shit. You got to get new money. You got to get money in Bitcoin.
That's what's going to happen.
And then there's only a certain amount of Bitcoin, right? Like the Bitcoin number is finite. Right. So like maybe there's no Bitcoin for you.
Right.
Like, what the fuck are you talking about?
That's what's going to happen.
That's what's going to happen.
You just predicted the future, Joe.
And the thing is, whether this does or does not happen, the FOMO could create the price to go higher. The buying that we're seeing from MicroStrategy and all these Bitcoin strategy companies, if they keep buying as well, this could push the price higher, and then more people FOMO. Remember, most people at $50,000, they weren't interested. At $20,000, they weren't interested, but they will be interested at $200,000 or $300,000. And so this is something that we have to think about, because as the rest of the world is de-dollarizing, right? It does happen slowly, but it is happening. China, Russia, they've already de-dollarized. A lot of other countries are de-dollarizing as well, some throughout Africa. And so this is where Trump comes in. He said that he wants the dollar to be the world reserve currency. And I do believe that part of what he's doing there and what the government is going to be doing is kind of merging TradFi and DigitalFi and decentralized finance. And this is where we're already seeing the transition. This is where I think MicroStrategy was given the green light to keep buying and buying and buying, even though they're taking out more and more debt, because they're taking out debt in dollars, and the dollars are being devalued while Bitcoin over the course of time is effectively being revalued. We are in the transition now. People don't realize that they're in the transition until after the transition, the same way that we don't realize we're at the top of the market until after the top of the market, right? You can't say, oh, this is the top, until we go down, because then you don't know that it was the top of the market. Maybe we're going to go higher. And USDC, by the way, and this whole stablecoin situation in the US, getting regulatory approval and laws being placed to allow digital dollars through stablecoins, this is another indicator that we are transitioning into this new digital world of finance. And if if we are really transitioning to the digital world of finance, yes, we may have corrective phases along the way, but effectively, we may not ever have a bear market again. But hold on, guys, hold on, because we're talking about Bitcoin, not the rest of the market. And so that's where the extended cycle theory comes in. So let's explore this. And by the way, I have a lot more to talk about in today's video. So make sure you guys stick around and also give the video a free thumbs up, because I also am going to show you a video of the secretary of the Treasury Secretary basically stating that the debt is not going to decrease. So a lot of people remember Raoul Pal. He's a Real Vision founder and a very big macro analyst and investor in crypto. And that's important to kind of separate. He is an investor, and so he wants his valuations to go higher. And so we have to keep that in mind. And he's playing with probably a lot more money than we are. And this is why I'm more leaning towards the extended cycle won't happen, but let's understand how it may happen. So at the heart of Raoul Pal's thesis lies the notion of global M2 money supply, which is basically the tracking of global liquidity in circulation. He observed that Bitcoin, along with other risk-on assets, tend to correlate closely with changes to global M2. He said if this is the case, then M2 is going to keep going up all effing year. If that is the case, then crypto and risk assets and in tech will do well all year, which is true. We are in 2025 and we're starting to see that happen. And so his analysis draws parallels to 2017, when Trump's fiscal policies and monetary easing led to prolonged period of dollar weakness, which fueled the crypto cycle. Remember, in 2017, we saw parabolic moves, but there was also a lot less cryptos. Now we have 12 million cryptos and tons of different projects. Back then, there were only maybe like 10 or 15 different cryptos in existence. And so a lot of the money was concentrated in these 10 or 15 cryptos. And that's where we saw these parabolic moves to the upside. Now we have a lot more. And so the market is a lot more diversified. So if people start buying crypto, they're not just buying 10 cryptos, they're buying hundreds and hundreds of different cryptos. And that's where the price may not go as parabolic as it used to, in my view, in my analysis. But a crucial factor in Raoul Pal's extended bull run thesis is that the business cycle, which tracks through the Institute of Supply Management, the ISM Manufacturing Index, historically an ISM reading above 50 signals economic expansion, which correlates with Bitcoin price surges. He said, quote, Bitcoin goes up as the ISM goes up. If the ISM gets up to its normal cycle peak of somewhere between 56 and 65, that will give us the magnitude of the rise in Bitcoin. But that's a big if, right? That is a big if. And so let's understand why he believes this is going to extend. He believes that the current cycle could extend into 2026 rather than peaking this year in 25, as many analysts have projected, including myself. His reasoning is based on the prolonged period of economic stagnation before the growth acceleration. He stated the business cycle is taking a long time below 50. It's starting to expand now, and that has probably extended the cycle into 2026. He clarified that this is not a prediction, but a working hypothesis, and the implications could be significant. A longer cycle would allow for higher valuations, a sustained investment influx, and a gradual rather than explosive blow off top. So originally he was saying banana zone, which is an explosive blow off top. And now he's saying extended cycle, which is more of a prolonged growth, right? A continual, slow, gradual inflow and steady inflow and transition from fiat into digital. And that could potentially drive us into 2026. He reiterated that the crypto market follows a predictable pattern with a year-long banana zone of exponential growth. He noted that the current correction phase aligns with past cycles and should lead to a renewed rally by April or May. We are in the corrective phase 1, then goes into March, April, and May. We accelerate up again into the next phase of the banana zone. Now, guys, he's talking about what's happening next year in 2026. We're in 2025. And effectively, if you do look at the Bitcoin price and the movement of the Bitcoin price, along with the rest of the market, I mean, look at this. We went from 2022, $15,000 to $100,000. We're almost 10x at this point. And even if you just take from the year of the halving, This was the parabolic move. And we've already basically had a double top here at the beginning of 2024. And so this phase, I think, is going to be the final phase of this cycle. But he believes that it's going to go into next year. Now, here's the deal. This is possible. This is possible that we are going to see the extended cycle. But I think it's going to be a little bit different than what Raoul Pal is saying. And I think that people are anticipating different than what Raoul Pal, like most people, I think they think extended cycle, like we're going to stay in this range, we're going to go higher. We may have another kind of floor being created. And then in 2026, we'll go higher again. But in my view, I think that we are going to see the markets go parabolic in the end of 2025, then correct. Remember, we still have some global economic triggers that could potentially cause the markets to fall. One, the Federal Reserve has said that they may start easing, but they're going to do it very slow, higher for longer, remember. That's an issue. The other thing we have to think about is the tariff situation. What is going to be the implication when the tariff start to kick in? Because remember, when the tariffs kick in, those are lagging indicators, right? Because the tariffs went into effect a few months ago, but we're not going to see the effect of that for a few months. That could potentially push the price of the markets lower. We also know global, debt may continue to rise at an exponential rate. That could also cause the markets to come down. But where does crypto lie in all of this, right? Here's the deal, guys. If we are in this transition period to the new digital financial world, there is a very large possibility that Bitcoin will continue to go up. Because Michael Saylor said that he's going to keep buying the top of the market. He is continuing to buy the top of the market. Now we have all of these other players continuing to buy the top of the market. Metaplanet, 21, GameStop, the Bitcoin mining companies, they're all doing it. But I think that this is still a risk. Because I remind you, like the Bitcoin mining companies, they're buying at the top of the market and they're still selling the Bitcoin that they mined. And they have been, right? This doesn't make sense. And Raoul Pal, he is pushing this like, we're gonna go into next year. Summarizing his outlook, Powell urged investors to maintain a perspective and resist emotional trading. He emphasized that the importance of long-term vision, proper portfolio construction, and patience, saying you guys need patience more than anything else, and we need to understand the markets. Our futures are resting on the same thing. Let's be clear. Our futures are different than his future. He probably has enough money for the rest of his life to never work again, never trade the market. And so I don't think that he's going to put all of his money or risk all of his money going into 2026. That's personally, I don't think that he's going to do it because I'm not going to do it. And I'm not even at that level. And so saying you guys need patience more than anything else, if you've been watching my channel and have been with this channel since the FTX collapse at least, if not before then, we've had a lot of patience, guys, and look at where the market has gone. And so at the top of the market, all-time record highs, to say, just have some patience. This is, in my view, pretty insulting, right? Because we have had patience. And look at where we've gone. Now, maybe if he's talking about altcoins, we haven't had an altcoin season, but really the focus has been on Bitcoin, right? The institutions, the banks, the governments, all they care about is Bitcoin, Bitcoin, Bitcoin. And we also have to think about what Hunter Horsley said. He is the chief executive officer at Bitwise Investment. They are ETF providers for crypto. And he believes that CoinMarketCap's leaderboard, this era of crypto, of utilizing market caps as the indicator for which are the top cryptos, he thinks it's over. He said, do you invest in Walmart, Adobe, MasterCard, Johnson & Johnson by just looking up and comparing their market caps? No, you don't invest in Exxon because its market cap is cheaper than Eli Lilly. You invest because you think that they're going to make money, right? And so this is what we're seeing, right? Cantor Equity Partners, 21 shares, MicroStrategy, Metaplanet. We're seeing all these companies, these people buying into these companies that are buying crypto, but they're not actually making any money. And what happens if we do downturn and if they are forced to liquidate some of those holdings? We don't know if they're going to have to do that yet because none of them have been through this cycle. And if you guys were with my channel last cycle in 2021, I told you guys towards the end of the cycle, I will no longer be making investments in any cryptos at the end of that last bull market unless they made it through 2 bull runs and 2 bear runs, or 3 market cycles. Basically 2 market cycles. At least 1 bear run, at least 1 bull run, and 1 other. If the crypto didn't make it through those, I wasn't investing, because we don't know at the end of the market which cryptos are gonna last, right? We don't know. And so we don't know when the market's going to drop. We can just theorize and look at the rest of the ecosystem of money and kind of figure that out. But yeah, we don't know how these other companies are going to do. People are like, oh no, MicroStrategy is never going to sell. It's like, well, they may not have a choice if the price goes significantly lower and their debt is due, and they may not be able to buy more if the same situation occurs. But nobody's looking at that right now because everything is good. When everything is good, you have to look at how things could be bad. And when things are bad, you can look at how things can be good. You always have to be ahead of the market. And so Raoul Pal putting this all the way into next year and saying have patience and all of this, there is a potential that we could extend into 2026. But do you want to risk it? Do you want to risk it? I don't know. That's the question you have to ask, because there are a lot of people at this point. And this is why I think that these are indicators that we are at the top of the market, not at like the midpoint in the market, or that we're going to have an extended cycle. Is that all of a sudden, like, we've been following these markets for 4 years since the last bull run, and now all of a sudden everybody just wants to buy Bitcoin. And, here's one headline. CNBC just said that retail investors haven't even started buying Bitcoin yet. I mean, how is this, how would this be true? I've been buying Bitcoin. You've been buying Bitcoin. A lot of other people have been buying Bitcoin. And so this cycle is not about retail investors. Guys, look at the Bitcoin halving tracker. The Bitcoin halving tracker has $134 billion in it. You think that this is all just retail investors? No, this is Wall Street. This is big money. And so the big money has been buying. And yes, retail have been buying as well, but this cycle is not about retail. And I don't think retail is even going to be the indicator. I think it's really going to be, especially with Bitcoin, because the market cap is so high. So to move that market cap, you either need a very low supply or a very high demand, or a combination of both. We're also seeing other things, right? CNBC saying Bitcoin is going to be the fastest growing asset in the next 10 years. And so this FOMO could potentially cause companies to buy and countries to buy. We haven't seen that just yet, but that doesn't mean it's not coming, right? And this could lead us, right, if more companies do what MicroStrategy is doing, taking out debt, buying Bitcoin on a regular basis. This could potentially drive the price much higher over a much more prolonged period of time. Let's listen to what they said.
I'll give you 2 pieces of this. Number one, Bitcoin clearly over the past 15 years of its existence has been the best performing asset class in history, bar none. It is widely expected to continue that track record over the next 10 years. So on an attitude of trying to create wealth long term, crypto makes a lot of sense. Second, most importantly from investment advisors' perspective, Bitcoin's price movements are independent of all other asset classes. The prices don't move in sync with stocks or bonds or real estate or gold or oil or commodities, and that makes it a perfect addition to a diversified portfolio. If you engage in rebalancing, which all investors ought to do periodically, owning Bitcoin helps to lower the risk of the portfolio while improving the returns. A risk-adjusted profile is one of the big claims to fame of adding Bitcoin to a diversified portfolio.
It's really.
Now I'm going to pause here for a second because I completely agree. And by the way, it's the banks are doing this as well. U.S. banks are holding early talks on a joint crypto stablecoin. Now everybody's like up in arms about this, like, oh my God, the banks are going to get involved. Guys, JP Morgan already has their own coin. They already have a blockchain, right? They're just looking to implement these things now. A stable coin in the banks is going to probably be, it's not going to be like USDC. A lot of people are making a big deal about it. Listen, the banks are probably going to have a big hold on this, whatever stable coin they use, because similar to Zelle, like the banks created Zelle so that they can move money in between each other for very low cost and making it easy for us as the consumer to do it. But this is basically all they would have to do is implement a coin to just transfer the money between the banks. I don't know that's how they're doing it, but the banks want to be involved in this, but they're not going to hold the crypto the same way they don't hold your money, right? So once the banks start getting involved in crypto, we have to really focus on what their rules are. Are they able to loan it out the way that they're able to loan out dollars, or are they going to have to hold it one-to-one? So if I put one crypto into a bank, they have to have that in their custody at all times. If that's not the rule, what do you think the banks are going to do? And they could be doing this on purpose to like purposefully screw up the crypto ecosystem and make people not trust in crypto. That way you have to go back to the banks. So we have to be very, very cautious of that and pay attention. But the banks are getting involved. This is the best performing asset. It probably will continue to be, but that doesn't mean that we're not going to have phases of bear market. Remember, the bear market can last longer than the bull market, the same way that the bull market can last longer than the bear market, as Rob Powell is saying here. I don't know which one's going to happen. I can't predict the future. I just kind of take all of this analysis to try to understand, was I wrong? Because maybe I am wrong, and maybe we are going to have an extended cycle, especially when investment advisors at banks can start telling their clients, you need to allocate 5% of your portfolio to Bitcoin or 1% of your portfolio to Bitcoin. I mean, think about it. Just Fidelity alone, they have Bitcoin and crypto trading on their platform. They have over $4 trillion of assets under management. 4 trillion. Okay, so let's just take 4 trillion. That's 4 million, billion, trillion. And let's say we allocate, their clients allocate on average about 1.5% of their portfolios to that $4 trillion. That's $60 billion of potential net inflows. And that doesn't include inflows into the MicroStrategies of the world or the Bitcoin ETFs of the world, because we know that that's where the hedge funds and retirement funds will probably put their money. And so what we're hearing here is very important to understand, like over the long term, Bitcoin is going up. And so if you were to say to me like Cryptoviser, like, is this extended cycle for the whole crypto market or just for Bitcoin? I'm more inclined to say it's more for Bitcoin and the top cryptos with actual fundamentals, right? Not the market cap, because market cap doesn't tell us what's under the hood of these ecosystems. And so therefore, I potentially think that a lot of the altcoins are going to see moves to the upside this year in 2025. They will be going down 95% most likely, because most of these altcoins don't do anything still to this day. There's very few that actually do and have real value. But some could still be highly overvalued, But right now, everybody's focusing on Bitcoin. That's the key, right? Banks, Bitcoin, and stable coins. Investment funds, Bitcoin. Hedge funds, Bitcoin, right? The Bitcoin ETFs, Bitcoin. Let's continue listening in.
Really, the big claim for adding to anything. I mean, why do I need a new asset class? Okay, I have stocks, I have bonds, I have a nice fund for short-term money. I have a money market fund, and I have a little bit of gold. Why should I add Bitcoin? Your point is diversification, lower volatility, potentially adding to the returns. Those are good reasons.
That's all there is to it. In other words, if you believe in modern portfolio theory, if you believe in Harry Markowitz and his Nobel Prize-winning research that says investing is as much about risk as return, we want to manage that risk. We want to diversify so that we don't have 12 eggs in one basket. We have 12 eggs in 12 baskets. Well, if I can add a new basket, if I can further diversify my risks to protect myself on the downside while preserving my potential for upside, why wouldn't I want to add the newest asset class, the first one to be invented in 170 years? Last time we had a new asset class was the discovery of oil in the 1850s. This is a wonderful opportunity to further improve the diversification. And all the academic data tells us.
And what
I'll give.
So, I mean, this is what people are hearing when they turn on, the financial news channels. This is what they're seeing. This is what they're hearing. And this potentially could drive the price to go much, much, much higher, especially in a liquidity crunch. Even CZ believes that Bitcoin is going to $1 million during this cycle. Let's listen to what CZ says. And by the way, CZ is the former CEO and founder of Binance.
Okay, what do you think the price of Bitcoin tops at this cycle?
Oh, again, Very difficult question. Somewhere between 500K to a million, I think.
Wow.
Yeah.
Wow. I mean, I don't even think that. But that doesn't mean that I'm correct, right? I'm just an analyst. I'm trying to predict what is going on the same way that you guys are trying to predict what's going on. I consider myself more of a conservative type of investor. I mean, even though we're in crypto, but I look really at the short things, right? Yes, there are a lot of altcoins that potentially can move up significantly and you could do really, really well in, but there's also a lot of risk there. And there's a lot of dumping that goes on, right? Bitcoin is most liquid. And I mean, you could see that there's not really manipulation going on in the markets because if there was, when MicroStrategy buys, why wouldn't we see the price go up significantly? When they stop buying, why don't we see the price go down significantly? That tells me the market is liquid and it can absorb $2 billion of purchases by MicroStrategy every single week effectively without moving the market. That is good. That is good for stability. Obviously, we want these moves in the market, which we have seen. I just showed you. We're an 8x from the bottom of the market. And most people are saying, oh, no, we just started the bull run. It's like, where have everybody been for the last 4 years? I mean, look at this, guys. This is since 2022 when FTX collapsed. $17,000 was the bottom, 16,000. And we're now at almost $110,000, right? So we're up 8x from the bottom of the market, and people are like, oh no, the bull run hasn't even started. It's like, no, it has. And we've seen a steady increase. We're not seeing parabolic moves except in altcoins because I think that the Bitcoin and Ethereum markets have matured to that point. And now we're seeing Wall Street getting involved. And so it could happen if we have an extended cycle, steady move to the upside continually with corrective phases along the way. We could hit this. So maybe Raoul Pal is right. Maybe CZ is right as well. But then we have the other side, right, where the bull market progress, according to Rect Capital, is at 86%. He says progress will speed up on parabolic advances. And if we look at the chart, 2017, 2021, and 2017 and 2021, you can see the yellow line shows the, basically the end or the close end to the parabolic stages and where we are today. That's where we are. That's where we are in the same cycle. That's where we are in the same cycle, right? Scaled up. And so if we look in the 2017 cycle, massive parabolic move before the bear market started, right? And remember, the bear rotation into a bear market can take 1 year, could take 2 years. 2021, this is where we were in the cycle in 2021. And what happened? We had one more little pump up, but that was the double top. And that's kind of where we're at right now. And so now this is make or break time. This is make or break time for the market. Are we going to go back down, significantly and enter a bear market where we're not going to see these gains? Or are we going to go straight up and potentially maybe just a slow, steady increase over the next year or so? It is possible. It is definitely possible. And so we're also seeing tokenization, right? And tokenization is huge because as tokenization takes hold and more companies are tokenizing things like stocks, in this case, Kraken is launching tokens to offer 24/7 trading of US equities. So basically, by the way, this is for everybody except for the United States because the US laws, prevent it, but you can do it in the rest of the world. It's absolutely incredible. And effectively, they're tokenizing stocks on Kraken. And so what's interesting about this is you'll be able to actually transfer your ownership of that stock by transferring the token. Right now, like think about it. If you are at Wells Fargo, let's say, is managing your retirement, and then you want to move it over to Charles Schwab, it could take a week, pages and pages of paperwork, where with a token, if you wanted to transfer your shares from one account to another, you could just send it to the wallet. That is where things are going. And is it going to be backed by blockchain? Maybe. Maybe it'll be backed by a private blockchain, not a public blockchain. Maybe it'll be backed by a public blockchain. But we are starting to see the tokenization take hold. And so this could also drive speculative investments in the crypto space and push the price much, much, much higher. The other thing that we have to take into consideration is the crypto ETFs, right? Because this could create institutional FOMO and institutional inflows with record numbers. While I'm a little bit more on the reserve side of that, right? If we look at the Bitcoin tracker, $134 billion, right? And if we switch this to the Ethereum tracker, I think that there's one Ethereum. If I type in Ethereum up here, let's see, Ethereum, then yeah, we're $8 billion. So 8 billion compared to over 130 billion. So it's like 15 times larger, the Bitcoin ETFs, than the Ethereum ETFs. And so this kind of would give us an indicator if other ETFs are approved, whether it's the XRP or Solana ETFs. I don't know that it's going to get as much inflows as people are anticipating, but if it does, even gets slow and steady increases, and the grayscale products keep converting into ETFs, this could potentially push the price up much higher as well. But it could also push the price down, as we've covered in this channel endlessly, specifically during the 2021 cycle. When the SEC was approving any derivative product for crypto, whether it be the ETFs, futures, options, or anything like that, every single time that we've seen these products launch, the market goes into a bear market. This happened in 2017. Look at the data, guys. Back in 2017, at the top of the Bitcoin market, I think it was December 10th of 2017, the day before the SEC approved futures for Bitcoin. And then what happened? We went into a bear market. Then 2021, they approved futures again on Bitcoin and Ethereum. The SEC did it, right? In, I think, October, they approved it of 2021. And then they went live in November of 2021. And what happened after that? Bear market. And so everybody's cheering all of these ETFs on. And while I do think, generally speaking, ETF it does allow a lot more institutional investment into crypto, this could also be to manipulate the markets. ETF less so than the options and the futures products that they launch. But once the ETFs launch, eventually they launch options and futures on top of it, or swaps. And these are generally speaking not good for the markets. So these are indicators, like if Raoul Pal is correct here, that we have an extended cycle, what else do we have to look at to identify when that extended cycle may be coming to an end? And it's all of these different things that we're talking about here, right? The overexuberance of these ETFs, the overexuberance of the MicroStrategy thesis, and what could potentially happen if they can't raise money for the debt to buy Bitcoin? What if they, what if there's an issue with the coins that they actually do own, right? A lot of people are asking them for proof of reserves. What would happen if they came out and there was no proof of reserves? There's no wallet with those coins in them, right? This could cause just fear, whether it's true or not. It could just cause fear and cause the market to crater. And so these are things that we have to think about for this extended cycle if it's going to happen. But there's other indicators that are showing us that potentially the macro, right, what the government is doing, what the Federal Reserve is doing, what the Treasury is doing, those indicators indicate that they're going to start easing. And we know in quantitative easing, when the Federal Reserve is effectively injecting trillions of dollars into the economy, typically asset prices go higher because it's also causing inflation and devaluation of the dollar because they're printing so many. And so because they're doing it so late in the cycle, right, and potentially Jerome Powell is going to retire or get fired or whatever the situation, just get pressured into easing, I think eventually we're going to see the Federal Reserve easing significantly more, as we're starting to see them alluding to. But how long is that going to last? And is that going to cause the boom that we're expecting, or people just paying off the debts that they have? Or are they going to go and buy a home, a car, whatever? Because I'm still a little affected by the last cycle with all the inflation that we had, that if I had some extra money in the pocket, I may not just go buy everything that I can. And I think maybe a lot of other people will be doing that too. Plus, a lot of people are in debt. So if they just print more money and it eventually makes its way to the economy, people are just going to be paying off their debt. And then once they pay off their debt, they're in the same situation that they were a few years ago, and then they have to start creating more debt. that is for the really the bottom half of the wealth spectrum. It's very difficult to just like get off of zero, right, and to start investing. But that brings us to this analyst and Bitcoin maxi Fred, who says we're heading into a massive liquidity boom. Fred says at the end of the day, the pivot away from Doge, right, the Department of Government Efficiency, is complete. There will be no cutting of anything, only printing. This is something to think about because, you know, we heard about Doge going in. They want to cut the size of the government, lay a lot of people off, decrease the size of these government agencies. And that's just not what they're doing, right? They're cutting, obviously, a lot of waste, fraud, and abuse. They're cutting a lot of contracts or purchases that these government agencies make on a regular basis that may just be waste right now. But they're not really doing that much of anything else, right? And so that means that they can't reduce the debt. They can't reduce the deficit. So what are they going to do? They're going to print. And Fred says Bitcoin has only experienced this once in 2020, but this time could be even more explosive. And this is definitely something that I'm keeping an eye on very close. Because although I don't necessarily agree with Raoul Pal's thesis that we're going to go into an extended cycle, it's possible. And if we see the money printed this year in 2025, and we take the learnings from 2020, they printed the money in 2020. The money made it to people's pockets in 2021 where they were spending, and the inflation was occurring. And then in 2022, everybody was broke again and prices were significantly higher. That's what happened. And so in 2020, when they printed the money, that was when the pandemic was, but that was also the Bitcoin halving year. We're in the year after the Bitcoin halving, and they effectively haven't really printed money. And so if they start to print money this year, right, if the stable coin bill passes, the Genius Act passes, the budget passes, because I think August is the next debt ceiling date. So they're going to extend the debt ceiling. We know that they're going to do this, right? And what does that mean? That means more printing. More printing means more money. And so this extended cycle could potentially go into effect because we're 1 year late to what happened in 2020. And so if they're printing this year and they printed in 2020 and the money didn't make it to people's pockets where they started spending and we started to see prices going up because of the increase in demand in 2021, that means technically next year would be when that money kind of makes its way into the economy and we start to see prices and people spending and all of that. And that will put us into 2026. And so there is a potential that we do go into 2026. And as this money makes its way into the economy, we start to see the economy flourish, the prices of everything going up, and people feeling better about their finances. But there's risk here, guys. There is risk because remember, there was a pandemic, right? They shut down the global economy. That's why they printed all that money. This time, they're going to have to print a lot more money. But are we going to have to go into a crisis and where the market potentially falls 50% before they start printing to that level? It's something to think about, right? I don't know the answer to that question. I don't think anybody does. But it's something that we have to think about. And by the way, this is underway. The strategic pivot from austerity to running it hot. The newly passed House bill amplifies that the strategic pivot for the Trump administration from attempting austerity, right, cutting things down, to running the economy hot. And this is exactly what Treasury Secretary Scott Bessent said in a recent interview on CNN. Effectively, he says that they're not going to cut the debt to GDP, but what they have to do is increase the GDP, increase the growth of the economy. If we can grow the economy faster than the debt, effectively we're reducing the debt. That's their thought process on it. Let's listen to what he says here in the CNN interview. And don't forget to give this video a thumbs up. If you're up to this point in the video, let me know. Tell me, Cryptoviser, I'm up to this point in the video, and appreciate all of the support with the thumbs up. Let's listen in.
There are several components there. So if we unpack it, there is the growth, the potential growth of the debt, but what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
And so basically what he's telling you here is that they're not going to reduce the debt. They're going to increase the debt. And not only are they going to increase the debt, but hopefully they're going to increase the debt in ways that will increase grow the economy, increase the GDP, gross domestic product. And so if they're able to do that, the deficit to GDP goes lower. And so they are making a pivot away from like really cutting major cuts in government to let's grow the economy. And to grow the economy, they need to pump the market. And so to pump the market, they need to pump it in a way that increases the GDP. How are they going to do that? I don't know. It's going to be very interesting to see how this all plays out. But that's another indicator that we potentially are going to go into an extended cycle. Texas is moving to setting up a strategic Bitcoin reserve. And so what if more states start setting up strategic Bitcoin reserves and they start buying on a regular basis? We don't know all of the details of a lot of these strategic Bitcoin reserves. Are they going to buy on a regular basis? Is it going to be millions or billions or hundreds of thousands or just thousands? Because there's a difference, right? And for the supply shock to occur, you need significant amount of companies buying very little amounts of Bitcoin or very few buying a lot. And as I showed you, the Bitcoin ETFs, like they have already purchased quite a bit of Bitcoin, right? $134 billion worth. If we look at the market cap of Bitcoin right now, the market cap of Bitcoin, when I'm recording this video, any day now, Bitcoin, the market cap of Bitcoin is $2.6 trillion. So the ETFs have about 5%, 5 to 10% of all the Bitcoin in the world. And then you add on to that MicroStrategy and all these other companies that are acquiring, it's a big deal. And the fact that they keep purchasing on a regular basis, this is what is going to cause the supply imbalance. And going back to bonds, Japan's biggest life insurer said unrealized losses on the domestic bond holdings more than tripled this year through March as rising interest rates undercut the value of the portfolio. So what is this going to mean for the bond market? What is this going to mean as they're printing more money? What is this going to mean for the general economy? And really more importantly, what is this going to mean for crypto? Here's the deal. In my view, we could see the cycle going much higher in 2025, correcting into 2026. And then again, as that money or easing starts to hit the economy in 2026, I believe that we could potentially then see a reversal and the market move back up. But I do think generally in my thesis that has not changed, even though Raoul Pal is saying extended cycle, and I may be wrong on this, and the extended cycle may happen. I just don't think it's going to happen the way that Raoul Pal is saying, that we're just going to keep going up until the middle of 2026. I think we're going to go up in 2025. We're going to correct at the end of 2025 into 2026. And then probably towards the middle of the year in 2026 is when we'll really start to see the Federal Reserve results of any cuts that they have made. And I mean, we're so close to that 2% goal that the Federal Reserve wants, plus the fact that the president wants rates to be cut fast. Treasury Secretary seems to want that as well. And the Federal Reserve is going to get closer to that. The further we go, the closer we are. So we're either going to have an event that's going to force them to print a lot more, or we're going to get inflation down to their target range of 2%, and then they're going to cut. But either way, we're on the path to them cutting. And when they do cut and the money starts flowing, which could take a while, right? So if they start cutting at the end of 2025, it could take 6 to 8 months or maybe even a year until we start to see that money flowing in the economy. Remember, Congress in 2020 passed the $4 trillion, whatever it was, package in, I think, April. And prices, like the market was going up in 2020, but we didn't really see the massive, massive moves until the beginning of 2021, which was basically a year later. So it took 8 to 12 months for that money to really flow in, and then another 8 to 12 months until people to actually spend all that money and prices to go up. And then we entered 2022 where we had a downtrend and a very high inflation. I don't know that all those things are going to take place this time, but I'm just using them as guides to understand, like, if the Federal Reserve starts cutting rates and they start to quantitative easing, we're not going to see an immediate effect in the price of the markets. And that's why I don't think that we're going to keep going up through the middle of 2026. I think that we're going to go up in 2025, come down into 2026, and then at some point in 2026 start making the move back higher. I could be wrong. Obviously, my thesis changes on a regular basis based on all of the metrics of the market. But one of the things that we do is we stick to our strategy. We stick to our thesis unless other data comes in that makes us say, well, our thesis may be invalid. But when others are fearful, you want to be greedy. And when others are greedy, you want to be fearful. And right now, we are almost at extreme greed. And people are saying, Cryptoviser, you're an idiot. We're not going down. This is not the end of the bull market. Maybe it isn't. But based on the metrics, based on historical context, based on the fear and greed index, based on the macro environment, there is more likelihood that we will go down at some point in a corrective phase than go significantly higher. It doesn't mean we're not going to go significantly higher. I think over the course of time we are in crypto specifically. But I think in the shorter term and the medium term, people are forgetting about the risks because they want the reward. But when others are greedy, you should be fearful. And when you're fearful, you sell. And when others are fearful, you be greedy and you buy. That's how the market works. That's what Warren Buffett has said for ages. And the other deal is you don't want to buy high and sell low. And if we're at all-time record highs, who's buying? Michael Saylor? Fine. Let him keep buying at 110,000 all-time record high. I'm going to wait for a floor. That's my opinion. And I'd love to hear yours down below in the comments of this video. While you're down there, don't forget to hit subscribe. We upload almost every single day, talk about cryptos, do deep dives into individual markets and crypto assets to see which are the best investments for us. Nothing I say is financial advice. I'll see you guys on the next video. Invest responsibly and crypto on.